Frank Cappelleri is joining us to walk through some of the charts on the S&P 500 and more. Frank, the executive director of Instinet. Frank, let's start with S&Ps. You've got some really good charts here. I just want to kind of begin with what's happened with the few days of stalling out in the stock market, and now basically 10 days in where stocks kind of haven't gone anywhere, and with a little bit of a drift lower, maybe.
Oliver, pleasure to be here as always. Thank you. And you're right. And I think after the type of crash and rally we've had since that point, a little pause in the action on a relative basis probably doesn't surprise too many people. To put this current two-day move in perspective, I think it's important to remember that we haven't had more than that in a little over, say, 6 weeks or so. So we've had a number of a couple days down. And if you look at the last four, including this one, they've marked actually key short-term trading points, and each one has been a higher low. So if you go all the way back to the 2 days right after the March 23rd low, where it began. So in terms of how I look at this, I've been on before and talked about it many times, but I look at as many things as I can in terms of price patterns. And so far, since the lows, we've seen numerous amounts of bullish formations be able to be constructed, have the upside targets hit from a short-term basis. And anytime there's been a pause, it looked as if we'd see some bearish versions form, and obviously a lot of people thought that we have a rollover. That's not happened. So in basic terms, you typically have one of two working, and right now we have more bullish formations working than bearish.
I want to get to those bullish formations right now. Just to point out, we're looking at just the general uptrend since the lows. You do point out in your note today, though, that with a few of these down days, the uptrend momentum has maybe turned, the slope maybe turning a little bit, Frank?
That's right. And we saw this on the way down as well, right? It was so steep that we knew something had to change. So the number one first step for any of that is the character of the market actually flip. What it does from there is going to be important because, again, we haven't seen a downside follow through just yet. What I think we could probably be expecting at this point is maybe slowing of the action just a bit. And I think that could probably frustrate both sides, just because anytime there's been one of these big moves, you see a lot of people kind of jump on, meaning that momentum can continue higher or we're going to the lows. There's not much talk about more of a slow pace that can build a much more substantial bottoming process than what we've seen so far. So I think that is going to be the best case scenario going forward.
Okay, let's get to the bullish formations that still may be intact. You point out two in this note as well. This is just generally keeping track of the way the technicals have formed, that despite some of the slowdown in the slope of the ascent, these two are for the most part still intact?
Right, so the one that's most important from my perspective is when you had a breakout on April 6th through the 2650 area. That, and you look at the S&P, and really many of the indices, both domestically and globally, have something similar to that, where it's a cup and handle pattern and still has a target higher. For the S&P, that's around 3110. Now, if you look at some other ones, I know we don't have the charts in front of you, but I think it's very important to keep track of what's going on, say, in Germany, UK, and France, because, again, they're forming similar patterns. Germany is broken out, but really France and UK have had trouble, along with Japan. So those are the type of things I think we have to look for if you think about what's been causing all this. The coronavirus, obviously, and the economy problems, that's a global issue. So we need to see as many components on a global basis come back at the same time. If we don't, then obviously those types of divergences are going to be something that we have to look for and try to understand what it's going to mean going forward.
Okay, so the 3110 you mentioned, the cup and handle, we've got that one up right now that provides some of that buffer if it's still intact. And this one, when we look at where the cup and handle pattern forms, it should be some comfort for those who are worried about deep declines, because there's essentially support in the S&P 500 based on this, still pretty far down below, around 2650, 2700. But Frank, the other two we had up basically are showing the potential for other bullish patterns to maybe have broken. So is it like, 2/3 likely being broken right now, but the idea of a deep retest having some support about, 200 points lower from here?
That's a good way of putting it. What I try to do is point out all the ones that are alive currently, right? And sometimes what happens is they get violated and they morph into something different. So currently, correct, the 3110 is is the current target. And even if that gets violated, I think what has happened with the market, the way it has developed, is that you have a big cushion now. And so you could potentially come down, say, go down 2650, maybe even a little bit lower, and still have a feeling that a much more substantial higher low can come into place. Now, as that could change is if, again, one of these pullbacks turns into something more, then you see more bearish patterns form. And we saw that really all on the way down. Now, we look at that more on an intraday basis because things are happening so quickly. But really, it's all about follow-through from one side or the other.
One scenario that you say could potentially play out in May is kind of like this triple top formation in which we might be in the process of doing that. I think this one's pretty interesting because it offers a technical outlook that is in the intermediate term almost sideways as opposed to the deep drop that so many seem to still be bracing for.
That's right. And that's, I think, we have to be aware of, because if you have, say, a deep follow-through on Monday, there's going to be a lot of calls for a retest of the low or below that. But you could have a lot of whipsaws still, and you can still have a bearish outcome from that point. And again, I'm looking at this, the one you have up there could be potentially bearish head and shoulders pattern that could play out. Right. So I think as opposed to just these sharp reversals and acute activity, we may have to look at some of these patterns that can take weeks to develop at a time.
So, Frank, it seems like one conclusion of this, not to take it too far, but one conclusion is that at least in the short to intermediate term, it doesn't seem like there's technical support to believe in a fast breakdown. Again, I mean, in this scenario, we've been surprised so many times by this market. I don't think anybody's going to eliminate that from the possibilities, but there's not a lot of technical structure to support that idea with two bearish scenarios. Both the triple top we're looking at right here, that's got support at 27. And then even if there is a big pullback, we still have that cup and handle that puts support at 2650. So do you think the deep retest is off the table for now?
Well, like you said, anything is possible, but we have to go. I think we have to take this day by day. Now, there's a lot of people that will point out that we're very stretched, and I talk about a lot of those things as well. Like, for instance, earlier this week we had the most stocks above the 20-day moving averages in the Russell 2000 ever. Right, that's one thing that we couldn't persist for a long period of time. But what it again presents with us is, talk about it a lot, but a cushion to really at least key off of. So to put this in better terms, on the way down, right, back in March, it's very difficult to detect any near-term support levels because we're in a free-for-all. Now we have a number of them to key off of. So at the very least, there are some reference points to limit our risk at. So I think that's the most important thing going forward. And a lot of people have that in the back of their minds, whether they're moving averages or just previous stopping points.
Really good stuff, Frank. I want to hit two others real quick before I let you go. First, the dollar. When you see in the dollar's chart, it got so wild that a layperson, technician, and learner like myself has no idea what to make of it. How do you get in here and figure out any trend over the last 3 months for the dollar?
Yeah, you're not alone. It's been a wild ride for the dollar. And I think it is difficult to look at this from a short-term perspective. And I try to do that every day. And right now, it's just trying to, I believe, just form a higher low. Maybe you see the multiple lows there over the last few weeks or so. But I think to get a better idea, we don't have it there. But if you look at a long-term picture of this, it's obviously still in an uptrend, and this could just take a little bit a longer time to play out because you can get really whipsawed in the currency market, especially the dollar.
All right, so we got some serious whipsaw and a few points of support here. Haven't really broken the trend for the long term, so basically taking a long-term look. Frank, last one. I want to get your thoughts on Bitcoin. I like that you've been putting this in the report. I don't think we've discussed it much, you and I. And what does it look like to you right now?
Well, I think it's a bullish formation. It looks similar in terms of what the other asset classes look like. It had the big drop and comeback, but this, also has a cup and handle pattern, and you see the target there near 11,000. And clearly it has a lot of horsepower when it moves. But again, this one has very well-established points that we can key off of. And it took a little while to get through that area. But as of now, over the last few days at least, it separated itself in terms of at least being able to consolidate pretty well after a pop. So I think we need to continue to watch that. And, people that I talk to, it's not really in the stock market vernacular right now. And for rightly so, there's a lot of other things going on, but, that's especially when we could watch any asset class when it's moving, but it's not really on people's radar. So I'll definitely look at that one as something to continue to track through May.
Yeah, okay. I see a big arrow pointing up still on this, so I'll take that away from it. Appreciate it, Frank. Always good to hear from you.
All right, Oliver, thank you.
Thanks a lot. Frank Cappelleri joining us with the technicals from Instant.